I hope you all have gone through the results and the copy of presentation uploaded on our website. We have had a remarkable year on multiple fronts: structural, operational, financial, industry developments, as well as non-core aspects, and culmination of all these have helped us report a robust growth for the year. I will touch upon each of these briefly. We are happy to state that the InvIT launch is now getting completion of the first year, which has resulted in a leaner balance sheet, rating upgrade, interest cost saving, and flexibility of monetizing assets for IRB. On the operational front, we saw over 1.2 trillion worth of projects being awarded during the year by Road Ministry. With softer BOT flow, we took a strategic decision to enter the HAM segment, and participating in over 30 bids, we won 4 projects totaling up to 9,000 crores. One of them comprising to be a BOT of around 3,500 crore size, and 3 HAM projects of 5,500 crores. With these wins, we have registered a 7% market share in the total bids as well as in HAM projects, and a growth of 51% in our order book, which has now grown to rupees 15,000 crores. This gives us strong growth visibility for the next 2 to 3 years, basis which we have crafted our strategy and goal for FY20, which is 110, which is 100 billion in revenue and 10 billion profit, in effect helping us ride through the Mumbai-Pune completion without any dip. This is with our existing order book only. What is further comforting is the fact that NHAI has another 90,000 crores worth of projects lined up for bidding in FY19. More wins will further improve these numbers. On the long-pending peripheral issues, we have also been cleared, and the snag of CBI cases is now behind us, and we have already notified you about the same. I will now request Anil to give an overview of the financial performance of the company. Over to you, Anil.
Thank you, sir. Now I will present the analysis of Q4 of FY18 versus Q4 of FY17. The total consolidated income for Q4 of FY18 has declined to 1432 crores from 1656 crores, a decline of 14% over Q4 of FY17. The consolidated toll revenue for Q4 of FY18 also declined due to the transfer of the 7 asset to the InvIT to rupees 514 crores from 594 crores, a decline of 14%. And there is a decline of 14% in the construction revenue also, from 1062 crores in Q4 of FY17 to rupees 918 crores in Q4 of FY18. On the decline has also resulted decline in EBITDA for Q4 of FY18 has declined to 709 crores from 851 crores, a decline of 17%. Interest costs also reduced due to transfer of the 7 asset to the InvIT by 36% to 209 crores in Q4 of FY18 from 326 crores in Q4 of FY17. Depreciation is also declined by 49% to 115 crores in Q4 of FY18 from 226 crores in Q4 of FY17. PBT has increased to 384 crores in Q4 of FY18 from 298 crores, registering growth of 29%. The PAT has increased by 16% to rupees 240 crores in Q4 of FY18 from 207 crores in Q4 of FY17, a growth of 16%. Now I will present the analysis of the full year FY18 versus FY17. Total consolidated income for FY18 has marginally reduced to 5,863 crores from 5,969 crores in FY17. The consolidated toll revenue for FY18 declined to 1,889 crores from 2,378 crores for FY17, a decline of 20% due to transfer of the 7 assets to the Infrastructure Trust. Consolidated construction revenue for full year of FY18 has increased to 3,973 crores from 3,591 crores, registering a growth of 11% over FY17. EBITDA for FY18 has decreased by 10% to 2,848 crores from 3,171 crores over FY17. Interest cost also reduced by 27% to 967 crores in FY18 from 1,333 crores in FY17. Depreciation is also reduced by 36% to 544 crores in FY18 from 855 crores in FY17. PBT increased to rupees 1,338 crores in FY18 from 984 crores, increased by 36% over FY17. PAT has also increased to 920 crores, increased by 29% from 715 crores in FY17. Now I will request moderator to open the session for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yeah, thank you, sir. Sir, in this quarter, what would be the weighted average traffic volume growth in your portfolio?
Traffic growth in this quarter was close to 6 to 7% across the portfolio.
Okay. And sir, on the HAM projects, would it be possible to give us some idea about the economics in the sense that how much was the L2 bid and what would be the, say, construction EBITDA margins on these projects?
See, in the HAM project, one important aspect we have to look at the NHAI TPC and on which project got awarded. In all three HAM projects, we have bagged the project on average price which were higher than NHAI TPC by 25 to 27% over NHAI TPC. So that is one data point. In terms of the PAT, basically we will be able to generate around 10 to 11% PAT on the HAM project also.
Okay, so sir, this currently in your construction business, you do report about 30% kind of EBITDA margin. So this 10-12% PAT would correspond to 30% EBITDA margin in HAM projects, or it will be higher or lower than that?
See, in the BOT business, because of the funding requirement, interest cost also, because of the delay disbursement from the bank, there is interest cost component also comes below EBITDA line item. And plus we will not be basically adding in our equipment bank substantially. So depreciation also will remain more or less on the same side. So basically EBITDA margin will not be at 25 or 30%, but definitely will be able to generate around 10 to 11% PAT margin.
I think the EBITDA margins in the HAM case, because of lower interest costs, would tend to be in the range of around 18% rather than a higher EBITDA because of the other income that you have on the BOT part of it. So, but the 17-18% EBITDA would still constitute a 10 to 11% PAT, as Anil mentioned, because of the nature of the business, because the cash flow remains positive because of the initial mobilization advance coming from NHAI and very low equity infusion required, and installment-based release of the 40% grant from NHAI.
Okay, sir. And so my last question is on, any comments on NHAI's strategy of not going for too many BOT toll road projects and going mainly for EPC or HAM projects? I mean, What is driving this strategy, and do you think this is like sustainable over longer period of time given funding constraints, etc.?
The interaction what we keep having with NHI and other stakeholders is that they believe that there is not enough of takers for BOT projects, and not many would have the capability to infuse the large equity required in case of BOT projects. As a result, they have lowered the number of BOT projects. In fact, they had only a couple of projects on BOT this year, and we ended up picking up one. And the rest of the projects, they are either dividing into an EPC or a HAM project depending on the viability. And that's the reason why we see more of HAM projects this year. It is not to be believed that there won't be any BOTs in the future, because every time we have asked them specifically, they have said that as the capacity of the private sector to invest more increases, they would tend to have more BOT projects. They have already done a TOT which reflects that they do want to have private investment to come into the sector. And as a result, we remain very much gung-ho that going forward there can be a higher percentage of BOT coming up. But we certainly, for the time being, have decided to adapt to the bidding environment and have ended up winning 3 HAM projects.
Okay, sir. Thank you. Thanks a lot for taking my questions.
Thank you.
Thank you. The next question is from the line of Rajeshri Mitra from CIMB. Please go ahead.
Yeah, hi, sir. My first question is, if I look at the construction revenue, there seems to have been a dip year on year. So any specific reason for this? And
yeah. Basically, Solapur ADC and Kaithal Rajasthan project has got completed. And Rajasthan project started middle of this quarter. So that's why there is no substantial revenue is coming from those projects. But going forward, since on the backdrop of this order book, we should be able to execute, basically the growth will be in range of 20 to 25% in the construction revenue.
Okay. So next year you are expecting a growth of about 20 to 25%. And you mentioned about the EBITDA margin for the HAM projects, in the EPC segment for the HAM projects. What is your overall expectation on the EBITDA margin for the EPC segment for next year?
It will be remaining range of around 26%.
Okay. Thank you. That's it from my side. These were the questions. Thanks.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for taking my question. So just a couple of bookkeeping data points in terms of when could we expect the other under construction projects to be operational? So the likes of Goa, Kundapur and Yedeshi Aurangabad?
We have provided in our presentation, if you refer the relevant page, we have provided the date. If I will be sharing with you very shortly. If you have any other question, please go ahead.
Okay. So we have received the full COD for basically Solapur Yedeshi, right? Or is it just a provisional COD?
It's a provisional COD.
And when do we expect the full COD, sir, on that front?
Full COD will take another 2 months' time.
Okay, 2 months' time, sure. And also, sir, I think after a string of 4 quarters in which we saw very muted traffic growth in Vadodara, Ahmedabad, I think this quarter we've seen a healthy 11% kind of a growth in toll collection. So could you take us through any developments there that, maybe the traffic, or if the traffic on the parallel road that was there that has slowed down, or the kind of shift that we are seeing there?
From the low base, I think basically we are not seeing any further kind of divergence.
Okay.
In fact, on InvIT assets like Surat Daisar and Bharuch Surat also, we have seen an 11 to 13% kind of revenue growth.
Right.
Similar kind of growth is reflected on Ahmedabad, Vadodara also. And in terms of your earlier question with regard to the completion, Goa, Kundapur, we are expecting January 19 and Yedeshi Aurangabad, August 2018.
August 18. Fair enough, sir. And sir, regarding the HAM projects that we have won, Basically, I think overall what we are seeing across the sector right now is that with so many HAM projects there in the pipeline and not all the banks willing to fund these projects, many of these projects are kind of finding it tough to do the financial closure. Banks under PAC, SBI are doing selectively. So anything that you believe that, any problems that we are facing, or do you believe that it should not be a problem for us in terms of getting these projects for financial closure?
No, I think your observation is very right that so much of orders getting flooded in such small quantum of time, it's going to be challenging for the banks to decide upon funding all of these. And given the state of banks that they are in today, I think credit will flow in a very reasoned manner where people have been able to demonstrate execution in the past, successful repayment of loans. And certainly for IRB, I don't see any problem in terms of achieving the closure at all, given the past performance and the relationship and the status of not having a single loan where any restructuring has been sought in the entire 25 years history. So I am very much sure that the banks will be more than comfortable funding the IRB projects.
Fair enough. And sir, on the back of the order book, which has almost doubled in the last quarter itself, what is the kind of top-line growth in the EPC business that we can expect in FY19?
In next 2 years, basically substantial order book will get executed. I think around 15% growth in next year. And thereafter, basically it will be almost 40 to 50% growth will be in FY20.
Sorry, how much?
Almost 7,000 crores of revenue in FY20.
7,000 crores of revenue in FY20?
Yeah.
Fair enough, sir. And sir, lastly, my question is on the strategy going further. So, as I think Atul asked that we are seeing very few BOT projects being awarded. So, going forward, sir, I think we might have a couple of more TOT projects also coming up. So, given the aggressive bid that took place in the first package that was awarded, what would be our strategy? Would we still be balancing between TOT and HAM projects that we get, or we would probably try to get a more TOT project, or is it just on a merit basis?
Okay, so it's a good question. The strategy will continue to bid on a sane manner where it can make money, whether it is BOT, hybrid or TOT. So we don't want to compromise the returns for our stakeholders. So without compromising that, whatever comes our way, we will bid on that. As we mentioned earlier, we bid for more than 30 projects this year on HAM. But we had a hurdle rate in mind that we don't want to compromise below a particular profit percent. And with so many projects being tendered out, we were comfortably able to pick up projects where we will be able to deliver a 10-11% kind of PAT on the construction side. And that is kind of hurdle rate that we would look forward for. If it is a BOT project, naturally the equity IRR that we will look for would be certainly higher in the range of 16-18%. Whereas if it is a HAM project, the equity return on a gross equity basis, what we would tend to look at would be in the range of 10 to 11% given the nature of HAM project, which is treated as a AAA asset once the construction is complete. So TOT also we will bid depending on the viability of the project. We would not want to have any aggressive posturing, and we have seen and have experience of having dealt with aggressive bids in the past where we have seen projects getting stuck midway. So we would like to be on the side where the project can make money for itself.
Fair enough. Thank you so much for answering my questions, and I wish you all the best.
Thank you. The next question is from the line of Subramaniam Yadav from Shubhkam Ventures. Please go ahead.
Sir, great guidance, sir. Just wanted to understand for achieving this 10,000 crore revenue and 1,000 crore of PAT, what would be the equity investment in HAM and BOT by end of FY20? If you can give us some color on that. And standalone debt at that point of time.
Yeah. So, we have provided in page number 21. So, by FY19, the equity required will be roughly 800 to 850 crores.
No, the total equity. I am not particular year equity. I just wanted to know by FY20, what would be the overall equity what we have put in into HAM and BOT projects?
25 to 26 billion of equity will be required over the period of next 3 years.
For the outstanding BOT plus HAM together.
Yes. Yeah. All together.
Yeah.
26 billion.
No, 2,500 crore is for the existing BOT what and HAM we are going to put in, right? Yes. And what we have already put in equity would be roughly around 4,500 crore, if I'm not wrong.
Yeah,
right?
So if you look at the total book, it would be around 7,000 crores of BOT book.
Right, 7,000 crore of BOT, right. And so what would be debt on the book, standalone book at that point of time?
Book on the whole of the BOT?
No, sir, standalone. On the EPC front.
I think the standalone
EPC front.
The corporate loan book that we have is in the range of around 1,500 to 2,000 crores.
Okay, that will stay there only?
Yeah, I don't see that going up.
Okay, great, sir, great. All the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, I just wanted to know how has been the traffic development on the two recently commissioned projects on which traffic has already started, that is Solapur-Yedishi and Kishangarh-Gulabpura.
I think both the projects look very promising. Solapur-Yedishi has been able to give the numbers in line with what we had expected it to be at the time of financial closure. And so has been the case for Kishangarh-Gulabpura. Both the numbers are absolutely in line with our original estimation. So at around 90% toll rate, on Solapur-Yedishi, the run rate is in the range of close to 19 to 20 lakhs per day. And for Kishangarh-Gulabpura, it is in the range of 38 to 40 lakhs per day, which is absolutely in line with the original estimation.
Enough, sir.
This is for Kishangarh-Gulabpura. This is the revenue we are collecting at 75% rate.
Right.
And there will be no tariff revision for 2.5 years, 3 years till the construction is complete.
Right. And sir, there is this new road project that is Road Ministry is contemplating, that is Gurgaon to Mumbai Expressway. Is it likely to cannibalize traffic on your existing road projects or the projects which are likely to get commissioned in say next 2 to 3 years? And if at all, yes, are you contractually protected so that you earn the deserved return that you had when you won those projects?
Yeah, very good question. I would say that no, we don't expect the projects to get cannibalized at all. For a simple reason being that if you look at the origin destination survey of these projects, most of the freight traffic is going towards the Mundra port, which will continue to use the route via Ajmer and Kishangarh, Gulabpura and coming to Udaipur and so on and so forth. So considering their end destination, I don't think the Gurgaon, Jaipur, Kota, Baroda would make sense for them. And there is a good amount of localized traffic running between Udaipur to Jaipur and within Rajasthan. So don't expect any impact of that, number one. Number two, when we were awarded the Surat-Dahisar project in 2008, the same year in the same set of projects, Gurgaon-Jaipur 6th lane was also awarded. And not a happy statement to make, but that 6th laning is yet under construction after 10 years. So we'll have to be seen how fast that so-called expressway is rolled out. And I have my own doubts about the timelines in which it can get completed to, in any meaningful way, hamper the Rajasthan project that we have.
But sir, I'm just wondering, like when we bid out for these projects, right, we never have such information like which all projects can likely to come in say next 5-10 years, and our portfolio generally has a 25-year PP agreements of concession, right? So how do we really factor in such kinds of risk in our traffic focus?
Yeah, so very good question again. The answer lies within the concession agreement itself, because it is a very moderately structured BOT agreement which works on a floor cap kind of a model. And in case of targeted traffic not reaching in the particular year, there is a provision to enhance the concession period. So to a good extent, one is protected under the concession agreement framework. And secondly, there is also a talk at the NHBF level between the ministry and NHBF, where a discussion is on to say that if under Bharatmala project, if the government decides to come up with any new set of roads which can hamper the existing infrastructure, then NHAI would tend to buy back those projects which are being hampered. So it is in a very nascent stage of discussion at this point in time. We don't envisage any of our projects presently getting hampered in this kind of an activity. We are very sure about that. But even then, this particular talk is ongoing, and in case if any aggressive road development plan is unfolded by the government which can result large number of projects unviable, then we are pretty sure from the discussion what we are having with them that a resolution to that extent also will come along.
Thank you, sir. That's really helpful. I have a last one question, if I may. Sir, when the HAM project that you bid out, the construction cost that you had bidden, so what construction revenue you would be booking? I just wanted to understand. Would that straight away translate into your construction revenue, or only part of the quoted amount will get transferred to the construction revenue?
I get where you're coming from. Our construction order book and the construction revenue will be in sync with the BPC. We are not bidding at any discount to the BPC, or we are not going to achieve our construction at discount to the BPC, and the construction will be at BPC.
Okay, sir. Fine. That's helpful, and all the very best for the future. Thank you.
So to add on to your point, I would say that the construction will be at BPC, which will result in a 10-11% PAT, and we have accounted for sufficient O&M expense, whether we have bid at some lower number or not, and after expensing out that actual O&M, we will be able to deliver a 10-11% IRR on gross equity invested on the projects.
Gross equity, okay. Fair enough, sir. So basically, sir, 10-11 is typically margin that we would have earned, but this is kind of a deferred kind of EPC. So there is a 7-8% additional EBITDA that is getting adjusted for the deferred part of the incomes, right? That's the way when.
I mean, the construction revenue will be booked in the 2.5 years period itself.
Right.
There is no deferment happening here. The EBITDA...
the money that we are supposed to receive from the NHI, that is deferred over like 15 years, right?
So what happens is during the construction period, like what we have in the BOT, there will be 40% grant coming from NHI, and the balance 60% will be funded on a basis of 80-20, 80% coming from the lenders and 20% equity from the sponsors. So right. As far as the SPV is concerned, the EPC arm will be fully funded to the extent of 100% of the work done, and the balance 60%, what will come from NHI will come in deferred for the SPV. So the construction arm will be able to report a full revenue realization in the 2 years period itself, and also the PAT.
Okay, sir. That is very clear. Thank you.
Thank you. Before we take the next question, we would like to remind the participants, you may press star and 1 to ask a question. The next question is from the line of Ankita Shah from Elara Capital. Please go ahead.
Hi, sir. Congratulations on good numbers. Firstly, sir, how is the BOT revenues likely to shape up going forward? Or your toll numbers, basically?
See, basically, now we will start collection in the project which are under construction, like Karwar, Kundapur, and the ADC Aurangabad. And plus, full tolling will start on the Solapur ADC, Kaithal, Rajasthan, and Ahmedabad, Vadodara. On backdrop of this, I think by FY20, our toll revenue will be close to 24 billion.
24 billion. Okay. And, sir, how is debt likely to shape up going forward?
I think by FY20, when most of the project will get constructed, for intermediate period, the debt equity will be close to 2.5:1. But this is without considering any sale of the asset to the InvIT. The moment we'll sell asset to the InvIT, the debt equity will come down below 2:1.
Okay. Sir, any plans in the near term to transfer any of our existing assets in the next 1 year or so, FY19?
By FY19 end, I think the assets will get eligible. We don't expect any asset to get transferred in FY19. The asset transfer will happen in FY20.
Sir, which asset could get transferred?
See, there are, firstly, Solapur-Yadishi is one project which is now operational. And as Anil mentioned, towards the end of FY19 is something when that asset will become eligible.
Correct.
And can be transferred to the trust.
Sure. Got it. And, sir, one last thing on the TOT project that you said that you would continue bidding for these kind of projects. What kind of return expectations would you target for these projects?
It's a difficult question to answer considering the response we received for the first TOT. But still, I'll attempt to answer that. I think looking at the long gestation of such projects, although we appreciate that there is good amount of certainty in the financial modeling, considering the large equity requirement for such projects, I don't think anybody would like to bid at a lower teen equity IRR. So one will have to model it depending on the revenue stream, the inherent cost benefits that one may be able to get because of the embedded sixth leasing opportunities, and one will have to package it. So it's difficult to give any specific number at this point.
Got it. Okay. So our expectation would be around 15-16% at least.
I mean, the straight comparison, what I can put forth is that it has to have a higher return than investing money in inventory.
Correct. Okay, got it. And plans for new project additions for this year?
If we go by the existing run rate, anywhere between 7,000 to 9,000 crores of order book addition is what we will target.
7,000 to 9,000 crores. Perfect. Got it. Thank you so much and wish you all the very best.
Thank you.
Thank you. The next question is from the line of Rajiv Agarwal from Research Bytes. Please go ahead.
Hello.
Yes.
So I want to know in the current liabilities, other financial liabilities has increased significantly. So could you throw light on that?
Yeah, can you just explain which line item you are referring?
I am in current liabilities. This other financial liabilities has increased significantly. From 12.
We have received Rajasthan 3 projects where we have obligation to construct, and all 3 projects are having close to 100 plus kilometer length. Almost cost is in range of 1,500 to 2,000 crores each. And totaling to rupees close to 4,500 to 5,000 crores, which is getting added to the current liabilities.
Okay. Thank you.
Thank you. The next question is from the line of Kunal Kamal from Cogensis. Please go ahead.
Sir, thank you for taking my question. Just wanted to ask, what is your view on the TOT, and are you likely to bid for the second round of the TOT bunch that will come up for auction?
Our view is very clear. We'll bid for them. Hello?
Yeah.
Our view is very clear. We'll bid for them.
All right, sir. Thank you.
Thank you. The next question is a follow-up from the line of Subramaniam Yadav from Shubham Ventures. Please go ahead.
Sir, in the presentation you have given the guidance of 10,000 crore revenue and 1,000 crore of PAT, 100 by 10, right? And while Anil sir was addressing the revenue of BOT, he mentioned roughly around 2,400 crore. So that means our EPC revenue should be in the line of 7,600, right?
That's correct.
Right? Okay. Thank you. Yeah.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thanks for taking my questions. I had 2 questions. One was, given the fact we with almost 9,000 crore rupees of inflows in this year, and I'm assuming I'll take you at least 7-8 odd months to be able to kind of have everything in place in terms of financial closure, signing agreement. So, which essentially means, I mean, we would be able to start booking numbers from these projects only in Q4. So how would my appetite change because of the fact that it will take you 8-9 months to kind of get these projects moving? So what kind of number would you look at, I mean, in terms of bidding in this year in FY19? Because now you would be required to take care of base as well, right? Because we're talking about almost 7,000 crore rupees of revenues in FY20. So the idea would be to grow even bigger in FY21. So how would that change my bidding strategy now?
As I said, if we continue to bid and win anywhere between 7,000 to 9,000 crores worth of orders, that would, back of envelope calculation suggests that would imply into a 4 to 5 year CAGR of anywhere between 30 to 35% on the construction order side, construction execution. That's the kind of growth that would be visible looking at the present run rate.
And do we have any number in mind as to, I mean, how much of this would you want to have from BOT toll and how much would be from HAM? Or if you were to get all the BOTs, you would take all the BOTs and then HAM?
I think we'll be flexible. I don't think full 7,000 to 9,000 will be possible from BOT alone, considering the lower number of BOT projects being awarded. It will be a certain mix of both. We have seen this year, where there was a 3,500 crores of BOT and 5,500 of HAM. So it would be some healthy mix is what we assume it would unfold.
Sure. And so in Agra, Etapa, we seem to have seen some divergence from our project to the recently commissioned expressway. I mean, because there's this concessionary tariff that they're charging as of now. So how much is that number which is we've seen some diversion there, and when do you expect that to come back?
I think one needs to necessarily understand the contours of this particular project. The Agra-Lucknow Expressway was always identified as a competing facility when we bid for this project.
True.
So this was not a surprise to us.
Okay.
But it was also very clearly stated that they will be tolling at a particular rate. And presently they are only collecting a very concessional rate tariff from the users, which is creating some kind of distortion in the traffic pattern and the flow to give on the project. We are already in the process of quantifying that and lodging our claim with NHAI with regard to that, because that is change in the overall contours of that project, which then make it a competing facility because of they charging the toll at a much lower number than what they were supposed to as per the original plan.
Sure.
So that is something which we are working out. But at the same time, what we understand from the state government is that very soon they might actually start collecting toll at their pre-agreed and pre-notified rates. So if that starts, then we believe that divergence should come back on the NH.
Sure. And how does this pre-agreed or pre-notified rate compare with our number in terms of toll that we charge?
I think the expressway number would be significantly higher than the NH number.
Okay. And also if you could share your thoughts on Kaithal, Rajasthan, because there again the adjacent road is still not complete, and which is where we're losing some business as yet. So,
yeah, that's correct.
So when do you expect that to come through, and what will be the number once this road is in place, the adjacent stretch?
I think once the expressway starts collecting toll at the full rate, certainly the revenue should come back, and the other roads are not up to the mark where diversion can be sustained. And Kaithal, I think again similar thing, the adjoining corridors, here it is not a question of competing corridor, here the corridors earlier to our section needs to get complete, and they are in very good hands in terms of execution. So we are sure that our colleagues and fellow contractors will complete them fast. So once from Ambala to Kaithal, once that whole corridor gets built, I think that will result in a significant traffic uptick for Kaithal Rajasthan border projects.
Sure. And how much could be the number, I mean, once this adjoining stretch is complete?
At least 30% jump to the revenues is what we expect. Depending, I mean, if we do some OD metrics that we have done, it suggests that it should have a ramp up of at least 30%.
Sure. And sir, any update on the claims that we filed for Ahmedabad-Vadodara 250 odd crore rupees? And also, I mean, any update on the Kolhapur project?
Kolhapur project, MSRDC has already quantified the claim that they are going to pay. It will be close to 470 crore rupees.
Okay.
And out of that, another 100 crores has already been released by them.
Sure.
So total, out of the 470 crores, 150 crores is what we have now received from them. And balance money, we are told, has been provided for in the budget. So expect to receive the balance also very soon. Which was the other claim you asked?
Ahmedabad, Vadodara, sir.
Okay. Ahmedabad, Baroda, the claim is now lodged with CCI, which is the quasi-judicial authority of NHAI, where one can quickly take up their claim for an early resolution. And we expect the same to get heard in next 1.5 months' time with the CCI, post which we will have some more visibility about how it's going and what are the chances of its early resolution.
Sure, sir. Sure. Thanks a lot.
But at the same time, while we are on Ahmedabad, Baroda, I would like to bring to your notice that to address the cash losses on the project, the company has successfully done few things, and one of the prime things that we have successfully achieved is a reduction in the interest rate.
Yeah, it is there in the presentation. Yeah.
Yes. So that reduction of 2.25% on a 33 billion loan has already been achieved,
sure,
resulting in a saving of almost 70 crore rupees annually.
Sure, sir. Thanks a lot for taking my questions.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Thanks for taking my question again, sir. I actually got disconnected, so I'm sorry if I'm asking this question again. In the beginning of the call, you mentioned that the kind of EBITDA margins that you're expecting for the HAM projects is around 17 to 18%. So just wanted to corroborate that, sir. Let's say if you're looking at around 7,000 crores of top line from the EPC business in FY20, as you mentioned, and assuming almost 40 to 50% of that would be from these three HAM projects in FY20 that I'm talking of. So would that mean that our consolidated EBITDA margins for EPC business would be closer to, let's say, 23, 25% rather than the 30% that we do right now?
Absolutely right.
Okay. Sure, sir. Just wanted to verify that.
Yeah,
thanks a lot.
Absolutely right.
Thank you so much, sir.
Thank you. We take the last question from the line of Swan Agarwal from Axis Bank. Please go ahead.
Yes, sir. In last 1 or 2 months, I've seen a lot of road developers, they have stopped bidding because their order book has increased significantly. I see IRB Infra still bidding for a lot of projects right now. So would it be possible to give a number, as in what will be the maximum order book which you can have, as in at that number you'll stop bidding?
My dear friend, will be happy to know which are the companies who have decided to stop bidding. Will help my strategy on next bid. But I can only say that we'll be comfortable bidding for another 7,000 to 9,000 crore of orders for this year.
Okay, thank you.
Thank you. I now hand the conference over to Mr. Virendra Maiskar for closing comments. Over to you, sir.
Would like to thank all of you for being there on this call, and would like to thank you for that. So we hope to have you all again on the next call when we declare our first quarter results for the next financial year. Thank you.